There's a lot of FOMO. There's a lot of stuff going on here, right? We got a break structure to the upside. We got an order block created here. This is the New York low. We've got liquidity. Liquidity's already been taken out here. So next thing for us to do is to sweep these liquidity lows, tap into our order block, and then go, right? Now, I did enter my order block on the 1 minute time frame, so I'm going to place that in there now so we can just see. Obviously, you could have traded the you could have traded the 5 minute and been totally fine. Oh, no, sorry, this is the 1 minute. Right. Let's kind of clean this up a little bit, right? Again, we are still bullish, looking for longs, right? We're acting off the daily order block. We are targeting this area here, right? I did find a 3 minute order block in this zone that I targeted based on the idea that there was order blocks created, breaking structure, and lots of inefficiency. It didn't have to be this, but to me this was a very obvious level to target. We can look at this. We can say, right, price swept the structure high, came to the downside, right? The move that broke structure ended up being this here. This was a break of structure. So that means that this candle, refine it down to this one. Right, it left inefficiency, right? You could say that this is one as well. Right, there's a bit of structure here that broke down. But for me, I did choose this one. I think both would have worked fine. Ultimately, it did reach the top one. Sorry, that's not a clear explanation, but we do have a bit of liquidity down here as well. Not that it matters. It's already filled. It was swept out. So anyways, yeah, so I chose this based on the fact that it broke structure and it left inefficiency and it was towards the higher side of the order block within the 1 hour, right? This 4 hour order block, again, was false. So we have this order block here. Right. And this kind of is my ideal setup. This is my high probability setup. Now there happens to be 2 liquidity zones, which is double probability for me. I do prefer that there is at least 1 liquidity zone within structure. What I'm looking for when I trade a setup like this, it could be on the, let's go to the 5 minute. Right, we have our 1 hour order block set right here. At this point, I'm already asleep, but I set it. I was confident that price would run into it. We have liquidity taken out here. We have liquidity zones here and here. We have an order block down here, break of structures, and a bit of inefficiency on the 15 minute going upward, right? So what I'm looking for at this point is I want price to start breaking these structures, right? If price breaks these structures here, it grabs this liquidity and it taps into this order block, there's 2 ways we trade it, right? Risk entry or confirmation entry, right? In this case, I set this order before I went to sleep. It was a risk entry. My scaling was a confirmation entry, so we'll kind of go over those in just a second here, right? So price then does what? Price goes up, rips through, grabs this liquidity, gives a bit of a reaction as it pulls that liquidity. It continues to the downside. It rips through this liquidity here, and then it reacts to a bit of inefficiency along the way. Price then continues to sweep these highs, right? People who think it's slowed down, it's going long. Again, this is just more liquidity, right? People who are going short at this area based on this momentum put their stop losses above this level. Price then sweeps above it right here, right? Takes out this liquidity. We know that our order block that we're looking for, again, is below these liquidity zones, right? So at this point, people who went short here got stopped out. People who are trading the breakout to go long here are about to get stopped out because they put their stops below here, right? This is how you have to think about it when you're trading it, right? So price then does what we'd like it to do. Oh, sorry, I forgot to place my order. When I placed my order, it was a 2.5 pip stop loss. 2.5, right? Initially, I was targeting these highs. I wanted to target this, but because I figured I'd be asleep, I didn't know if it would reach that high. I didn't want to essentially miss out on the profit if it decided to turn against me. And of course, because I'm sleeping, I can't set it to break even, right? And I'm not going to wake up and check it every time. I just not going to do that. I value my sleep too much. So I take profits at these highs in this range here. I think it ended up being at the top because I'm greedy. And then price did what? Price then tapped right into the 1 minute order block. It did not take me out, thankfully. And then we got a pretty strong reaction to the upside. Price halted at this level here. People took profits. I was asleep. This was 2 o'clock in the morning. Price then continued to break the structure high. Now, if I was awake, once price hit this level here, I would have set my trade to break even. But I was asleep. I woke up around 5 to trade the overlap, London, New York overlap, or at least prepare for it. 5 o'clock was right around here. It's coming up. So by the time that I woke up, all the profit was essentially gone. Currently, this ran to about 12 R, right? When I woke up, it was 5 o'clock. Profit was basically down here. I set my order to break even right around this level. This is now 510. I set my order to break even here because I said, well, most of my profit's gone. If it's going to do anything, then I'll give it a chance to do it. That was my thought process behind it. I set it to break even, and I just let it do its thing. I wasn't expecting much. I honestly thought price was going to break through the low side of here, grab liquidity from these lows. But I did give it a chance, and it did turn around for me. Now I do need to go down to the 1 minute so you can see where my scaling was. So what I was looking at here was price. I'm still targeting this area up here, right? My 3 minute order block that got refined from my 4 hour false order block to my 1 hour, and then to my 3 minute where there's inefficiency, it breaks the structure, right? So I'm in this trade. At this point, I am still at break even. I was managing it on the 5 minute, right? The 5 minute, I think maybe I locked in profits like right around here, which is 1.5%, right on this structure. This to me is not really structure. I didn't break the highs, right? This was me just saying, okay, if it's going to come back, I want to at least get a little bit. So I locked it in. That's what I was thinking while I did this, right? So if we go back to the 1, I saw price it created equal highs here. right? Which we know there's liquidity above. So I was pretty confident that price would come up and break through this level, right? I wasn't sure if it was going to continue upward. Obviously, with this bearish momentum here, it didn't look like it wanted to, but I traded the way I like to trade, right? I got a break of structure. I have a liquidity being swept right around here. There is a little liquidity in this area, just like on this flat area, but it's not super prevalent, but it is there, right? So I have my order block, right? Order block, a break of structure, a little bit of liquidity, price is coming through. There's a little bit of imbalance to be filled here, right? So that's what I look for in a trade. I place a scale in. I think I gave this 2.5 as well, possibly 3. I can't remember. But if I get stopped out, then it was 3 because I did not get stopped out. So at this point, right, we've got 1.5 locked in. We have this pending, right? Price then sweeps the lows, messes around a little bit, creates another liquidity zone right here, right? So it gave me a little bit more confidence that price was going to sweep below this into the order block, because that's what price likes to do, right? There's inefficiency, there's liquidity, and there's an order block. Price then comes and it eventually, right here, tags me in. Right? This is based on this order block. This is based on liquidity between my order block and my entry. Oops. Right? And from here, we're managing on the 5, and eventually I switch to the 15, right? So I'm just going to play it out, right? Price then rips to the upside, right? Clears this structure. At this point, I move my stop loss to this area here, which locks me in at 4R. This one still has, I think I moved this to break even. I can't remember, right? Price then continues to break structure to the upside, right? Creates a little double top here, rips right through it. We lock in profits here. Am I on the 15 yet? No, right? At this level, we're breaking 5-minute structure. We're breaking 15-minute structure. So I start training the 15-minute structure. Again, my target overall is this 3-minute order block. Right, and we're just going to play it through. I smashed right into it. Actually, I think eventually it smashed into it. Yes, there it goes. I held it a little bit longer, and there it was. That's how I made my 28R here and another 23R right here. I think this is a little inaccurate. Overall, my overall profit was 49.1R, right? And this was all based on the idea of, let me go back down, right? Both entries are the same. One was a risk, one was a confirmation entry, right? The idea revolves around liquidity and how it interacts with our order blocks, right? What we want to see is an order block created by breaking structure, leaving inefficiency. It doesn't have to leave an inefficiency, but it helps, right? And then price continues to make these liquidity zones right here, equal lows, a little bit of structure, and then we see price break these structures and take the liquidity, giving us a little bit higher chance that these order blocks will work out, right? This is my setup. Screenshot it, print it, do whatever you want. This is what I look for when I'm taking my high probability trades. I base it on the higher time frame directions, daily, 4 hour, right? I target 4 hour order blocks. I target 1 hour order blocks. I scale them down to get a little bit more refined. I also look for scale-ins, right? Because it's important. Once your risk is off the table, you scale in. And when you're managing it, depending on where you are compared to your target and where price currently is, you have to figure out how you want to manage it, right? When do you take some profit off the table? Do you let the whole thing run? When do you move to break even? Where's your target? These are all the things that you need to think about when you're entering a trade. When you're entering a trade, you should know where your target area is. You should know generally what your entry is going to look like based on momentum of price. Is it going to be a risk or is it going to be confirmation? When do you scale in? When do you break even? All this stuff. Think about it, plan it out, and then trade it, right? Brad and Phantom have given us the tools to trade these ideas. We have to put it all together and trade it in a way that works for ourselves, right? So hopefully this answers some of the questions about liquidity. I know I kind of rambled a bit. I don't really do these videos often, but I did want to give you guys a little bit of content and something to kind of reference and just look at while we wait for some more content to come out. But again, it was a good day. I did take a few small losses. As we all know, the market's been a bit volatile. But yeah, I hope this clears up some questions. And thanks for watching. And I'll catch you guys tomorrow. Have a good one.